Most beginners don't lose money because they don't know strategies. They lose money because they lack discipline and the proper risk management. Today, I want to show you how to build trading discipline from the scratch and how to manage your risk the right way, especially as a beginner or if you have been struggling with risk management. Watch this video till the end because it will save you months of frustration, blown accounts, and emotional trauma associated with trading. It will also save your mental health. No hype, not a clickbait, no fast money lies, just the truth that keep profitable traders long in the game. What is discipline in trading? Discipline in trading is not motivation, it's doing the same correct thing repeatedly, even when your emotions are loud. As a beginner, discipline means trading only when your setup appears, sticking to your trading times, respecting your stop loss, walking away when you hit your daily limits. Discipline is not about trading every day. It is about trading when the conditions are right or when the requirements or your trading plans or conferences are met. Most of you overtrade because you believe that or you think that more trades equal more money. But my response to that is no. More trades without discipline equals faster losses. Why most beginners fail at discipline? This is the reasons a lot of beginners or even most traders struggle with discipline in trading. One is pressure to make more money. You think bills are waiting. Expectations and the social media profits create unnecessary urgency and you will keep running helter-skelter trying to make it at all costs. The second reason why most traders or beginners struggle with discipline is lack of a written trading plan. Without a trading plan or a written rules, your emotions will keep controlling you, and that's why the market keep hitting you. You don't know when to say no. You don't know the reason why you are entering a trade. Reason number 3, revenge trading. Losses triggers anger. The moment you lose money, you become angry. And what that anger does to your emotions or your psychology is to push you into revenging the market. And you will start what we call impulsive entries, entry without analysis, entry without rules. You just enter randomly. Next is oversized position. When you use large lot size, it will amplify your fears and greed, and discipline becomes impossible when risk is not controlled. This is exactly where risk management comes in. What is risk management? Risk management means protecting your capital first. Hear me well. Any trader without a good risk management is not a trader. He or she is just a gambler. If you are just starting trading or you have been struggling with your trading career, there was a time I keep losing money in trading. Not because I don't have strategy, but I was just digging to know what is these people that are succeeding doing that I am not doing right. The problem wasn't to fund accounts. The problem is, why do I keep losing? Until I discovered that the challenge I was having is risk management. Immediately I fix it, everything becomes sweet. If you can tell yourself the truth and follow these simple rules, between now and the match, you will see a great difference in your trading career. Rule number 1, risk very small per trade. Risk 1 to 2% of your account size. But if your account size is very small, you can make it up to 5%. I like being real. I will not tell you to risk $1 because you can imagine where your stop loss will be at that $1, but $5 is manageable. And if your account size is small, maybe like $100, do not use it to trade high volatile instruments or assets or currency pairs. A little shift in that account against you will blow the account. If you have $1,000 account, risk $10 to $20 per trade. This type of account, you can use it to trade high volatile assets like gold. I mean the normal golds, XAU, USD, not futures gold, GCI. When your risk is small, it will keep your emotions low and your confidence stable. But when your risk is magnified, you will keep panting. Any little shift, your mind will skip. So it's better you take it step by step. You will get there. If you are gaining value in this video, join my Telegram group. Link in the description. Drop your questions in the comment section. I will sit back to read all of them. We can discuss and learn together. Connect directly to me through WhatsApp. Link also in the description. Touch that share button. Like this video so that a lot of traders, both beginners and even the ones that are struggling, will learn this truth and apply them. Rule number 2, always use your stop loss. A trade without stop loss is not a strategy. Stop loss protects your capital, protects your mindset, and protects your discipline. Sometimes you might enter a trade and get distracted. Stop loss will save you if trade go against you. Stop loss is just you telling the trade or the market or your broker, I do not want to lose more than this. Stop loss doesn't mean you will not lose, but it is what will save you from losing big. Always remember, the market doesn't care about how you feel. It doesn't care about your hopes. It doesn't care about your emotions either. Rule 3, set daily loss limit. This is very important as a trader, and a lot of traders ignore this. One bad trade shouldn't destroy your days or weeks of progress. Set your daily loss limit, maybe 2 or 3 consecutive losing trades. Or you set a certain amount. If you lose this specific amount, you won't trade for that day again. When professional traders lose trade, they walk away. When beginners lose trade, they try to recover. That recovering is what pushed them into revenging the market. And when you keep revenging the market, you keep losing. The loss will continue to widen. Permit me to ask you these questions. Some of you that have traded prop firm accounts, do you think that the prop firms, they are stupid by setting a daily drawdown? They are not. They are trying to protect their money. So if big organizations like proprietary firms can set a daily drawdown, how much more you that is a beginner that is trying to start from somewhere? Maybe this will make more sense when we say survival first, then grow later. The first rule as a trader is to protect your capital. That is what we call survival. How do you build daily discipline as a trader? Listen, discipline is built before the trade, not inside the trade or after the trade. Here is a simple daily structure you can follow. Step 1, trade only one session. We have 3 sessions. Forex traders, Asian range, which normally holds the liquidity, London session, and the New York session. You mustn't trade the 3 sessions. Trade either the London session, where you can see movement, or the New York session. More sessions, most times, doesn't mean more money. More sessions, most cases, means more mistakes. Learn to set a limit and set boundaries. Step 2, use a trade checklist. Before entering any trade, ask yourself these questions and even many more as you plan yourself to trade. Is this setup valid? Is my risk below 1% or within what I planned that I'm going to risk per day? Is my stop loss placed? Have I placed my stop loss or have I planned what I'm going to use as my stop loss? Have I marked where my stop loss will be? Is this really part of my plan, my trading plan? What I am doing now, does it conform with my trading plan or is it contradicting it? No checklist, no trade. That is how to build discipline. Step number 3, journal your trading. This is very important. It might be boring, but it's very important. And I will tell you why. Every trade you want to take, write this down. Why do you want to enter that trade? How do you feel when you are entering that trade? Are you happy, angry, upset? Are you scared? Is your mind skipping? Write down again. Did I follow my trading plan? Did I follow my trading rules? Did I follow my conferences? Did I follow my set down rules? Write it down. That is journaling. Now, this is the reason. Progress comes from review, not revenge. If you don't review your past, you will hardly progress, because when you review your past, you will be able to find out where there are loopholes. These little things I mentioned here is what contributes, or when they pile up, is when you don't take care of them, that's when struggle sets in. The mindset every trader, whether a beginner or a struggling trader or a professional trader, must have or possess. Winning traders focus on the process, not profit. Your job as a beginner or someone who has been struggling is to execute correctly, not profit. Losses is not failure. The real failure is you breaking your rules. When you break the rules, you have failed. The market rewards patience, consistency, and discipline over time. In trading, discipline and risk management are not optional. These are key qualities you must possess, key skills you must have. They are the foundations of every profitable trader. Strategies comes and go, but discipline stays. So traders, start small, stay consistent, and protect your capital. If you learn something from this video, like it, comment so others can see it and learn the truth and build discipline. We need more discipline and successful traders in this industry. Subscribe to Finspoke for more honest trading educations, and watch my next video on your screen where I show you how to stop blowing your account and start growing. My name is Juliet. Drop your question in the comment section. We can discuss and learn together. Join my Telegram channel, link in the description. Connect directly to me through my WhatsApp. Link is also in the description. And don't forget to like and share.